After weeks of sideways movement, the market finally broke down, with the PSEi falling below the key 6,000 mark. What triggered the sell-off? Is there any hope for a rebound soon? Let's break it all down. Hi everyone, welcome to another episode of Intelligent Investing. I'm April Tan. After consolidating between 6,000 and 6,130 for the most of October, the PSEi finally broke down, falling 1.7% to close at 5,988.02. Losers overwhelmed gainers again at 177 to 87, while foreign investors stayed net sellers, unloading about 634 million pesos worth of stocks. The peso's depreciation was one of the biggest drags on sentiment, with the currency weakening past the 58.40 level to end at 58.63, down 0.8% week on week. Historically, a weak peso tends to hurt equities, and this latest slide only reinforces investor caution. Adding to the pressure were renewed concerns over slowing economic growth. Finance Secretary Ralph Recto warned that GDP likely slowed in the third quarter due to the government's anti-corruption reforms, with the impact possibly extending into 2026. Meanwhile, UANP economist Victor Abola now sees 3Q GDP at 5.2%, lower than the 5.5% posted in Q2, citing weather disruptions and weaker confidence. As a result, analysts including Metrobank's Nicolas Mapa and DBS Bank's Radhika Rao expect the BSP to cut rates again in December, bringing policy rates down to 4.5% to support growth. In general, there were already a lot of headwinds facing the economy. For example, there's a potential export slowdown because of the higher tariffs. Then, of course, the negative impact that had on investor sentiment or business sentiment as far as expansion is concerned. So you already had these headwinds happening. And then, with the ongoing anti-corruption drive of the government, we now know that a lot of the flood control projects were suspended. And probably the government is also viewing a lot of the spending that's going on, if they are really going into legitimate projects or not. So just to put things into context, how important is the government? Well, the government accounts for around 20% of GDP. So if they don't spend, that would have an impact already on economic growth, because the role of the government actually is to act as a buffer, when, let's say, consumer spending slows down. For example, during the pandemic, a lot of consumers were negatively affected. The government steps in and then it gives them money, it continues to spend, such that it will provide a sort of a buffer to the economy. The financial sector led the decline, with the PSE Financial Index plunging 4.3%, as 3 of the 4 index banks, BPI, China Bank, and BDO, fell sharply on worries that lower rates could compress margins. Peso-sensitive names Pure Gold, GT Capital, and Cebu Pacific also corrected, trading lower as the weaker currency raised cost pressures. And after 9 straight weeks of gains, gold miners finally cooled off, as gold prices dipped 3.3% to $4,113 per ounce. Top decliners included Manila Mining, Apex Mining, Lepanto, OGP, and Philex, as investors took profits following a long run-up. DigiPlus dropped 12.8% after the Department of Economy, Planning, and Development threw its support behind either banning or tightly regulating online gambling. Officials said its contribution to GDP was minimal at just 0.37%, while the social cost has become significant, with participation rising to 32 million Filipinos, half of the working-age population, from less than 500,000 in 2018. Reports suggest that most lawmakers favor a total ban, casting a shadow over the sector. In general, I think for DigiPlus, there is a lot of uncertainty right now. I think the first bad news was that the BSP ordered the delinking of the e-wallets to these gaming apps. And I think immediately after that, there was news that it already led to a 50% drop in, I would say, gaming revenues. So it just goes to show how significant that impact is. And now there are a lot of regulations being proposed. Now, if the lawmakers are for implementing tighter regulations and even a ban for them, then that would have a negative impact on these gaming stocks. While they have other plans that have been reported, such as opening in other countries and potentially, I think, even going into brick and mortar casinos, we still don't know what the impact will be, if they will be as profitable as they are in the online gaming space. So maybe the uncertainty will make the stock less exciting for investors. Megawide continues to expand its transport and real estate portfolio. It recently secured a 1.2 billion pesos contract for the Baguio City Integrated Terminal Project, another major deal after the 800 million pesos SLITX venture in September. Together with the Cavite BRT, these projects are expected to generate 300 to 400 million pesos in recurring income within a few years. Megawide's property arm, PH1 World Developers, also posted impressive results with 3.38 billion pesos in sales, more than double last year's figure and already 94% of 2024's total. Four more companies disclosed their third quarter profits, namely BDO, PNB, Union Bank, and Robinsons Retail. Out of the four, only PNB beat expectations, but this was mainly because of the 92% drop in provisions as its asset quality improved. Meanwhile, BDO, Union Bank, and Robinsons Retail delivered weaker than expected profits. BDO's operating expenses and provisions were higher than expected. Union Bank suffered from a 14.7% drop in non-interest income, while Robinsons Retail saw revenue growth slow due to the earlier shift in the school calendar and weather disturbances. After several delays, Maynilad's long-awaited IPO is finally pushing through. The country's largest water concessionaire will be offering 2.29 billion shares at 15 pesos each from October 23 to 29, with listings set for November 7. Now let's talk about what makes it interesting. What sets Maynilad apart is its stability, something that's becoming more important as risks to economic growth increase. Unlike most businesses, demand for water stays steady no matter where we are in the economic cycle. In fact, Maynilad's billed water volume has continued to grow from 526.9 million cubic meters in 2022 to 553.5 million in 2024. The growth may not sound huge, but it shows that people don't stop using water even when times are tough. That reliability gives investors a defensive play, a stock that can hold up even during slower growth periods. Adding to that stability is Maynilad's government concession, which runs all the way to 2047. Under this agreement, the company earns a regulated 12% return on what's called its open cash position, or OCP. Now, what exactly is OCP? Think of it as a running balance of approved investments, the money Maynilad has already spent on building and upgrading treatment plants, pipelines, and pumping stations, minus what it has already recovered through tariffs. Every time you pay your water bill, part of that goes towards gradually reimbursing Maynilad for those investments plus its allowed return. At the IPO price of 15 peso per share, Maynilad offers a projected 7% dividend yield, higher than most bonds and REITs, making it a stable income-generating play. While it trades at a slight premium to Manila Water, the difference is justified by its stronger growth potential in the less developed West Zone. At first glance, Maynilad might look a bit pricey compared to Manila Water, trading at 7.1 times 2025 earnings versus Manila Water's 6.7 times. But that slight premium is justified because Maynilad's West Zone is less developed, giving it more room for expansion compared to MWC's East Zone. As a result, Maynilad has bigger capex plans of around 163 billion pesos from 2023 to 2027 aimed at improving service coverage and efficiency. We're actually aware that a lot of IPOs do not succeed. But I think one of the good things about Maynilad is, first of all, its defensive nature, meaning that, the demand for water will continue to be there no matter what. So that will mean resilient earnings going forward. And aside from that, it's more like a bond because it will continue to pay that cash dividend. So right now, the expected dividend for 2026 is around 7%. So imagine if the company continues to spend on capital expenditures, then it can ask for more tariff increases. That dividend per share can actually increase some more. So it's like a bond with a little bit of growth in it. So I guess the beauty is, bottom line, even if the market goes down and maybe its share price will go down as a result, I think it would only be potentially a short-term problem, because as long as it continues to pay those cash dividends and these cash dividends would grow, then the share price should recover eventually. If you have a long-term investment time horizon, I'm sure you'd be happy to hold on to it because you're getting paid more than keeping your money in the bank. So I guess it's a matter of having a longer-term perspective. If you're looking for a stock where you can get a quick short-term increase, then that might not happen. I mean, I cannot guarantee that. But if you have a long-term perspective, given how high the cash dividends are and given how most likely it's going to be defensive and the profits are still going to grow, then I think it will make a good long-term investment. On the other hand, Manila Water lost 4.8% after Maynilad's IPO was priced at 15 peso per share, putting its valuation close to MWC's despite Maynilad's stronger growth potential, a comparison that weighed on sentiment. This week, the spotlight will be on the peso's movement, third quarter earnings results, and the US Fed's policy decision on Thursday. The market's technical picture has deteriorated after breaking below the 6,000 support. According to COL's chief technical analyst Juarez Barredo, the index could cascade further along its downtrend channel and may even accelerate lower before capitulating. He identified 5,905 and 5,804 as the next key support levels. More companies are also scheduled to release their third quarter earnings results. As of today, 5 companies have already disclosed their profits. Unfortunately, 4 out of the 5 disclosed weaker than expected results. Median net income growth was also unexciting at only 5.8%. Hopefully, the next set of results will be better. Meanwhile, the market is widely expecting the Fed to cut rates by 25 basis points after the announcement of cooler September inflation data. Aside from this, investors will also be watching earnings reports from 4 of the Magnificent 7 companies, namely Meta, Alphabet, Microsoft, and Amazon, which are reporting this week. Any earnings surprises from these tech giants could provide a boost to global market sentiment. That's it for this week. While the market's short-term outlook looks shaky, long-term investors may start finding opportunities, especially in defensive names like utilities, which tend to weather volatility better. Don't forget to like and subscribe so you're first to know what's moving the market. Once again, I'm April Tan. Remember to stay sharp, stay selective, and as always, invest intelligently.